Hello everyone and welcome to today's morning report on Monday the 9th of February with me, Rich Perry, market analyst at Tech Markets. The European trading session has got off to a fairly disappointing start, and that's come on the back of big bit of Chinese data over the weekend that showed that Chinese imports have dropped 19% in the year-on-year month, and that's certainly impacted on trading sentiment today. Commodity prices falling away. Certainly metals are not happy about that. But I suppose there is the flip side of that is that any sort of bad bit of data that comes out, does that mean that the People's Bank of China is going to therefore do further monetary easing? Well, it certainly looks at the moment as though the Aussie is a prime candidate for weakness on the back of disappointing Chinese data, but it's certainly held a little bit up on the back of that, so that might be the reason behind that. However, certainly equity markets have not benefited today. FTSE's down 60 points, DAX down 1.6%, 180 points, so big falls there on the equity markets in the UK and Germany. And the other news is the fact that the Ukraine, I think, is back on the agenda. Seems to be talks over the weekend between Merkel, Hollande, and Putin seem to not have really achieved anything major at all. And it seems as though that is an issue that's going to continue to run, and that has an impact on Germany because it's on German border pretty much. So it is a very important aspect for German trading, certainly. And hitting in risk appetite today. So we've had European markets down, but in terms of forex, is a bit of a strange move because we had a huge decline last week on the back of that payrolls report that impacted on the dollar strongly. Big strong run higher on dollar. This is the dollar index. No, not really impacted too much yet in terms of the net figure because we've had such a choppy bit of trading recently, and certainly we're still looking for a decisive move on that dollar, and there's a little element of retracement today. Euro's 35 pips higher, yen's also strengthened again. Other currencies such as the Kiwi are also benefiting today. So certainly this dollar move that we saw on Friday is unwinding to a certain extent. It'll be interesting to see how much it unwinds. The other important move has come on gold, which has rebounded after a significant sell-off on Friday, and I'll show you through that in the chart in a bit. But certainly we've had some fairly sizable moves that are just unwinding us slightly today. No real economic data today of any note, but certainly the legacy of this payrolls report continues. Now, that takes me to my chart of the day, which is the Aussie. I spoke last week about the Aussie forming some sort of a base pattern, or looking to form a base pattern above 78.50. And it's interesting, actually. You look on this daily chart, and if you just take a bit of a step back, you'd say this is just really consolidating. There's no real look of a base pattern at this daily chart, and it looks like it's just showing a series of fairly sort of inconclusive trading days on the candlesticks. And it's only until you really get down to the intraday level that you start to look at it and you think, well, maybe it is a base pattern. You've got this big resistance at 78.50 that was in place all week last week. Slightly broke through that on Friday for just about 1 hour before the payrolls data, and then got slammed after that payrolls data. But we've held on to this, interestingly, held on to the right-hand shoulder prospect of that support that comes in at 77.32. Held on to that, and it's still intact. I think this potential base pattern on this intraday chart. You wouldn't say that move on just before payrolls would be a confirmation move. It suggests that there is an element of support still for the Aussie, and certainly coming in above 77.32 as well. There is still a little bit of support for the Aussie, but not anything major yet in terms of recoveries. And certainly if you look on that daily chart, you wouldn't really get too excited about that. There's not too many positive candlesticks to be speaking of there, and it certainly looks like it's just sort of drifting as an unwind, and maybe that is the case. But at the moment, there is still the prospect of this as being a bit of a recovery base pattern, and if you get a confirmed breach, that 78.50, I think that could be a signal for some slight recovery in the Aussie, but at the moment it's still sort of basically trading sideways, and if it still holds above that 77.32, that is intact. But if it loses that 77.32, I think you could see it quite quickly come back towards that key low, that's 76.23. In terms of momentum indicators, fairly indicative of a sideways range really. The RSI sort of trading consistently towards the high 60s and then down towards 30s again and rallying back up again. So you've actually had a MACD crossover, which arguably I suppose would give you hope that the support's coming in, but certainly I think it's more of a range play at the moment, and whilst the bulls and the bears sort themselves out, but we wait and see how this one resolves. But at the moment it's fairly neutral. So I wish you good luck in your trading today, and I will speak to you later. Thank you.